Hi guys, good evening. Today is the episode 5 of the beginner trading mentorship. In this episode, we are actually going to see how to trade liquidity sweeps for a profit with, of course, a real market example. I'm gonna show you after this theory part a trade that I called on the episode 4. I said this is going to happen on USD GPI. It actually happened. I'm going to show you, then you can go to previous video and watch that if you don't believe me. Um, so this is actually I'm teaching you a setup. Okay, I'm teaching you like the a model how you can make money using liquidity. So first thing, how do we understand where liquidity is at? So to do that, we use equal highs or lows because this is where most of the liquidity is held. Personally, I like equal highs or lows in the 15-minute time frame. It depends on your style of trading. That's what I look at. So most of these concepts, if you studied the previous episodes in the mentorship, you should because every episode is connected, so you should already know the previous ones. There are many of these concepts they've already been taught, but not so deeply as I'm doing now. So, is it enough for us to enter the market price reaching the liquidity level? No, that's not enough because it might just be breaking it and keep going. So, we want it to reach the level, retrace back down with, reach the level, create a short-term low, go down, break that with strength, retest, and at the retest, that's when we enter short. By the way, now it may look just confusing. I'm gonna show you in the market. You will understand. It's a really simple but powerful setup. In fact, this is one of the most powerful trading concepts, in my opinion. Together with fair value gaps, but this is I prefer it even to fair value gaps. This is really my favorite. Okay, so here we have two examples. This is a bearish setup. As you see, the market creates two equal highs, breaks, goes down, retraces. This would be our entry point. Okay, that would be our entry point. I'm trying to find. Okay, this would be our entry point, and the market then dumps lower. So same thing here, but the opposite for bullish setup. So we create two equal lows, price breaks through them, takes the liquidity, goes up, retraces. This would be our long entry. Okay. Now I'm gonna show you in the live markets what happened also on USD GPI because it was actually this setup that I used. So we were okay looking at the 1 minute time frame. Okay, so let me delete everything. We had a lot of equal highs. Okay, actually three or more equal highs right here. Do you see? Equal highs. So liquidity is up here. I'm gonna write it for you. In this case, it is buy side liquidity because retail traders, the dumb money wants to buy at this level. Okay, so what does price do? Exactly, I really suggest you to watch the previous video, episode 4 of this mentorship. In the last part, I tell like, guys, this is what is going to happen. Price will sweep this high, go down, retrace back, and then you can short it. I said exactly that, and that's exactly what happened. Okay, so you can go back and look that. That's really interesting. I did. So I really suggest you to do it. So we actually created this equal highs, finally broke it, okay, created a short-term low right here as you see, a swing low. We're going to go deeply into this concept far um further in the mentorship. So we created a short-term low, okay. Price broke this low with strength, as you see the candle has been really strong. Retraced back to it. So here we would have took our short position exactly right here. Our stop loss should have been a bit higher than this high, as I always do. So about like this. Okay. So price retraces all the way back up, takes this liquidity here, but our stop loss is higher, so we don't get stopped out. We would have targeted about this equal lows right there. Yes, exactly this. Or maybe also down there. It depends. So we would have looked at the 15-minute chart, okay? And we would have said like what's the most likely that it's going to take probably this because we were in a really strong downtrend. So this was probably its target. Coming back to the 1 minute, as you see, this is what was going to happen. Look at this. Look at this beauty right here. In just about, okay, so in just 12 minutes, we would have made, let me check, 12 minutes, we would have made about risking $100, $190. Tell me if this is bad, bro. Tell me if this is bad. This is some people's monthly income in 12 minutes. Okay, using liquidity sweeps. It's so simple. You see, equalize, really obvious equalizer. Actually, just draw a line, wait for it to be broken, short-term low, retest, you enter short. You make this, bro. That's so unfair, but that's how it is. So it's just so powerful of a concept. The same is true, of course, for the opposite. We can like find another setup. If we were bullish this time, we were bearish. We had our daily bias bearish. That's another concept I teach. Please, I told. Please look at the previous videos. That's gonna help you. So write me in the comments if you need anything. As always, take your time to study. Have a good night.